Whether you're just starting your financial journey or looking to level up your money game, this video is packed with insights, tips, and strategies you will want to take advantage of. We'll cover 4 critical aspects of personal finance that are like puzzle pieces that fit together to create financial success: income and career, money mindset and behavior, economic understanding, taxes, and legal matters. Are you ready to take control of your financial future? If so, hit that subscribe button, give us a thumbs up, and let's dive into these life-changing money lessons together. Stay tuned, because this video is your roadmap to financial success. Let's get started. Income and career are interconnected aspects of personal finance that play a vital role in determining your financial well-being and overall quality of life. Let's explore these aspects in more detail. Employment income. It is the most common source of income for many individuals. It includes wages or salaries earned from a job. The amount you earn is influenced by factors like your skills, education, experience, industry, and location. Self-employment income. If you run your own business or work as a freelancer or consultant, you may have self-employment income. Self-employment offers flexibility but also requires managing taxes, retirement savings, and healthcare costs independently. Passive income. It refers to earnings from investments or ventures in which you are not actively involved. Examples include rental income, dividends from stocks, and royalties from intellectual property. Passive income can provide financial stability and support your long-term goals. Growth of income. Increasing your income over time is essential for achieving financial progress. This can be accomplished through career advancement, additional education and certifications, starting a side business, or investing in income-generating assets. Budgeting based on income. Budgeting involves managing your income to cover expenses, savings, investments, and debt repayment. Creating a budget that aligns with your income helps you maintain financial stability and make informed financial decisions. Career development. Investing in your career development is crucial for increasing your earning potential. Continuously improving your skills, taking relevant courses, attending workshops, and seeking promotions or new job opportunities can lead to higher income in the long run. Networking and building relationships. Networking and building professional relationships can open doors to new career opportunities and potential clients if you are self-employed. Engaging with colleagues, mentors, industry peers, and attending industry events can be beneficial for career growth. Salary negotiation. Negotiating your salary when starting a new job or during performance reviews can significantly impact your income. Prepare and research salary ranges for your position and experience level to negotiate fair compensation. Job satisfaction and work-life balance. Consider job satisfaction and work-life balance when making career decisions. A fulfilling career that provides work-life balance can lead to increased productivity, happiness, and overall well-being. Job security and marketability. Staying marketable in your industry is essential for job security. Keep your skills up to date, embrace lifelong learning, and adapt to industry trends to remain competitive in the job market. Career transitions. Career transitions, such as changing industries or starting a new career, can impact your income and financial stability. Assess the potential risks and rewards of career changes and plan accordingly. Entrepreneurship and side businesses. Consider starting a side business or pursuing entrepreneurship if you have innovative ideas or specialized skills. A successful business venture can supplement your income and lead to financial independence. Balancing passion and earning potential. Finding a balance between pursuing your passion and considering earning potential is crucial. Sometimes, your passion may align with a lucrative career, but in other cases, it may require a careful financial plan to support your dreams. Income and career decisions significantly influence your financial situation and future prospects. Building a successful career and maximizing your income potential are essential components of financial success. Strive for continuous improvement, take calculated risks, and make informed career choices to achieve your financial goals and create a fulfilling and prosperous life. Money mindset and behavior refers to the attitudes, beliefs, emotions, and habits that individuals have regarding money and their financial decisions. It encompasses the psychological and behavioral aspects of personal finance and significantly influences how people manage their money and approach financial opportunities and challenges. Let's explore this concept in more detail. Understanding money mindset. It is the collection of beliefs and attitudes individuals have about money. It can be influenced by upbringing, cultural factors, past experiences, and societal norms. Some common money mindsets include scarcity mindset, believing there is never enough money, abundance mindset, believing that opportunities for wealth are plentiful, and financial empowerment, feeling in control of one's financial destiny. Identifying limiting beliefs. Many individuals harbor limiting beliefs about money, such as feeling undeserving of wealth or believing that money is evil. Identifying and challenging these beliefs is crucial for developing a healthier relationship with money and making positive financial decisions. Emotions and money decisions. Emotions can strongly influence financial decisions. Fear, greed, excitement, and stress can all impact how individuals manage their money. Being aware of emotional influences can help people make more rational financial choices. Delayed gratification and impulse control. Money mindset affects an individual's ability to delay gratification and control impulsive spending. Developing discipline and resisting immediate gratification can lead to better long-term financial outcomes. Financial goals and motivation. Money mindset affects how individuals set and pursue financial goals. A strong and positive money mindset can increase motivation to achieve financial objectives and overcome obstacles. Risk tolerance and investment decisions. Money mindset plays a role in determining an individual's risk tolerance and willingness to invest in potentially rewarding but uncertain opportunities. Understanding one's risk tolerance helps in creating a suitable investment strategy. Overcoming financial stress and anxiety. Negative money mindsets can lead to financial stress and anxiety. Learning to manage financial stress, develop resilience, and seek support when needed are essential for overall well-being. Learning in financial education. A growth-oriented money mindset encourages individuals to seek financial education, continuously learn about personal finance, and stay informed about investment options and strategies. The role of gratitude and contentment. A positive money mindset includes cultivating gratitude and contentment with one's financial situation. Practicing gratitude can lead to a more fulfilled life while reducing the desire for excessive consumption. Financial self-efficacy and empowerment. Financial self-efficacy refers to the belief in one's ability to manage money effectively. A strong money mindset instills a sense of financial empowerment, enabling individuals to take control of their finances confidently. Breaking free from financial mind traps. Individuals may fall into financial mind traps, such as emotional spending, keeping up with appearances, or succumbing to peer pressure. Recognizing and overcoming these traps are essential for making sound financial decisions. Openness to seek professional advice. Money mindset influences individuals' willingness to seek professional financial advice or work with financial advisors. A positive money mindset promotes openness to expert guidance and assistance. Continual reflection and improvement. Cultivating a healthy money mindset is an ongoing process. Continually reflect on your beliefs, behaviors, and progress toward financial goals. Embrace opportunities for growth and improvement. Encouraging a growth mindset. Adopting a growth mindset toward money means recognizing that financial skills and knowledge can be developed through effort and learning. This mindset fosters a willingness to adapt and improve over time. Understanding and improving your money mindset and behavior is essential for achieving financial well-being and success. Developing a positive and growth-oriented attitude toward money can lead to better financial decisions, increased financial resilience, and a more fulfilled and empowered life. It may involve challenging deeply ingrained beliefs, seeking financial education, and taking proactive steps to improve your financial habits and behaviors. By embracing a positive money mindset, you can create a strong foundation for a prosperous and secure financial future. Economic understanding refers to the comprehension and knowledge of basic economic principles, concepts, and mechanisms that govern the production, distribution, and consumption of goods and services in an economy. Having a solid economic understanding is essential for making informed decisions as consumers, investors, and participants in the overall economy. Let's explore the key aspects of economic understanding in more detail. Supply and demand. Understanding the relationship between supply, the quantity of goods and services available, and demand, the quantity of goods and services consumers are willing to buy, is fundamental in economics. The interaction between supply and demand determines prices and quantities in a market. Market structures. Different market structures, such as perfect competition, monopoly, oligopoly, and monopolistic competition, have distinct implications for pricing, competition, and market behavior. Understanding these structures helps individuals comprehend the dynamics of various industries and businesses. Inflation and deflation. Inflation is the increase in the general price level of goods and services over time, while deflation is the decrease in the general price level. A grasp of these concepts helps individuals assess their purchasing power and the impact on their savings and investments. Fiscal policy and government spending. Fiscal policy involves government decisions on taxing and spending to influence economic activity. Understanding fiscal policy helps individuals evaluate how government actions impact the economy and their personal finances. Gross domestic product (GDP) measures the total value of goods and services produced within a country's borders over a specific period. Understanding GDP provides insight into the overall economic health and performance of a nation. Unemployment and labor market. Understanding the different types of unemployment, for example structural, frictional, cyclical, and their implications helps individuals assess economic conditions and employment opportunities. Opportunity cost. It refers to the value of the next best alternative foregone when making a decision. Recognizing opportunity costs helps individuals make rational choices in resource allocation. International trade and exchange rates. Understanding international trade and exchange rates helps individuals grasp how imports and exports impact the economy and how currency values affect international transactions. Economic indicators. Being aware of key economic indicators, such as consumer price index, unemployment rate, stock market performance, assists individuals in assessing economic trends and making financial decisions. Economic cycles. Economic cycles, characterized by periods of expansion, recession, trough, and recovery, impact employment, income, and business conditions. Understanding economic cycles can guide financial planning and risk management. Economic policy implications. An understanding of economic principles helps individuals assess the implications of proposed economic policies and how they may impact their personal financial situations. Behavioral economics. It explores the psychological factors that influence economic decisions. Understanding behavioral economics helps individuals recognize biases and make more rational financial choices. Economic globalization. Awareness of economic globalization and its effects on international trade, investment, and financial markets helps individuals navigate the interconnected global economy. Having economic understanding empowers individuals to participate actively in economic discussions, critically evaluate economic news, and make informed financial decisions. Whether as consumers, investors, or responsible citizens, economic knowledge is crucial for navigating the complex economic landscape and contributing to a prosperous and stable society. Additionally, learning about economics fosters critical thinking and analytical skills that can be valuable in various aspects of life beyond financial matters. Taxes and legal matters encompass a wide range of financial and legal considerations that individuals and businesses must address. Understanding tax laws, compliance requirements, and legal obligations is crucial for maintaining financial health, minimizing tax liabilities, and ensuring legal compliance. Let's delve into the key aspects of taxes and legal matters in more detail. Income tax. It is a tax levied on individuals and businesses based on their income. Understanding income tax brackets, deductions, credits, and tax rates is essential for accurately calculating and filing income tax returns. Capital gains tax. It is the tax paid on the profit earned from the sale of assets like stocks, real estate, or other investments. Different assets may be subject to varying capital gains tax rates. Corporate tax. This tax is imposed on the profits of businesses. Businesses need to understand tax laws related to deductions, credits, and compliance requirements to optimize their tax positions. Sales tax and value-added tax. Sales tax and VAT are taxes applied to the purchase of goods and services. The rates and rules governing these taxes can vary depending on the jurisdiction. Property tax. It is a tax levied on real estate, such as homes and land. Property owners must understand property tax assessments and payment schedules. Tax deductions and credits. Knowing eligible tax deductions and credits can help individuals and businesses reduce their taxable income and lower their tax liabilities.
Tax planning. It involves strategically organizing financial affairs to minimize tax burdens.
Effective tax planning can lead to substantial savings and more efficient financial management. Tax compliance. Complying with tax laws and regulations is critical to avoid penalties and legal consequences. Keeping accurate records and filing tax returns on time is essential. Estate planning. It involves creating a plan for the distribution of assets after an individual's passing. It may include a will, trusts, powers of attorney, and other legal documents. Contracts and agreements. Understanding contracts and agreements is essential for legally binding business transactions and protecting the rights and obligations of involved parties. Business formation and legal structure. Choosing the appropriate legal structure for a business, such as sole proprietorship, partnership, corporation, or LLC, has significant legal and tax implications. Intellectual property rights. Understanding intellectual property rights, patents, trademarks, copyrights, is crucial for protecting original creations, inventions, and branding. Employment laws. Complying with employment laws ensures fair treatment of employees and protects businesses from potential legal disputes. Regulatory compliance. Businesses must adhere to various regulations and compliance requirements set by government agencies and industry-specific governing bodies. Liabilities and risk management. Understanding liabilities and risk management helps individuals and businesses take appropriate measures to protect themselves from legal and financial risks. Consumer protection laws. Being aware of consumer protection laws is vital for businesses to ensure fair practices and prevent legal issues related to consumer rights. Bankruptcy and debt relief. Understanding bankruptcy laws and debt relief options can help individuals and businesses navigate financial hardships and seek legal solutions. Data privacy and security. Data privacy laws govern the collection, use, and protection of personal and sensitive information. Complying with data privacy regulations is essential for businesses and organizations. It is crucial to seek professional advice from tax advisors, attorneys, and legal experts when dealing with complex tax and legal matters. Making informed decisions in these areas can help individuals and businesses avoid costly mistakes, safeguard their financial interests, and maintain legal compliance. As we wrap up today's discussion on essential money lessons, remember that knowledge alone won't change your financial life. What you do with that knowledge counts. Take a moment to jot down your financial goals and commit to taking actionable steps. Thanks for being a part of our community. If you found value in this video, please subscribe to our channel Escalating Wealth and ring the notification bell so you never miss our empowering content. Until next time, take care, keep learning, and remember, your financial journey is yours to shape.